Banks have been caught red-handed as they persist in stealing clients' money. They have done so all because of the increased desire for corporate profits, a greed, a lust for more. Now employees from all 5 of the big banks in Canada have come forward and given specific details of the criminality going on from the inside. Well, you came here for the truth, so let me unveil that for you. Let's get into what has happened in Canada, but I assure you, this is going on globally. Let's get into it right away. I'm sure you have heard about this already, especially if you're in Canada. I wanted to do my own little expose on it. So basically, CBC has something called Go Public, and individuals can, contact them, and then they can bring this out into the public spotlight. A CBC report earlier this week about TD employees. Now remember, TD is where it started, but then it expanded. TD employees pressured to meet high sales revenue goals has touched off a firestorm of reaction from TD employees across the country, some of whom admit they have broken the law at their customers' expense in a desperate bid to meet sales targets and keep their jobs. Now, I'm not going to obviously read the whole article for you, but essentially what we have is more corporate profits needed. The management pushes the individuals to become more like salesmen instead of customer service, and this has been a very big problem throughout, beginning with TD. Then we find out actually, in fact, it's all of the banks that are doing this. And I'm sure if you go through and see all the others in the US, the UK, and so on, you will find the same thing. I hope that we get these type of reports. And of course, if I do run into them, I will bring that out. This article does continue on, but I'd like to show you another interconnected one. Employees from all 5 of Canada's big banks have flooded Go Public with stories of how they feel pressure to upsell, trick, that's the difference, and even lie to customers to meet unrealistic sales targets and keep their jobs. That's the difference. Look, if you want to be a pressure salesman like some of the used car salesmen out there, I don't agree with that tactic, but at least it's fair. The person agrees to it. But in these articles, you will read the quotes, how they say specifically that they did not get approval from the individual and they went ahead and did it anyway. I'll try to give you a few examples as we move through. They're getting calls in basically saying to the parliament saying, you got to investigate this. This is not allowed. In nearly 1,000 emails, employees from RBC, BMO, CIBC, TD, and Scotia across all of Canada describe the pressures to hit the targets, monitored weekly, daily, and in some cases, hourly. Management is down your throat all the time. They want you to hit your numbers, and it doesn't matter how. So we have it being a widespread problem. It's not one individual bank. It's not one particular area. Okay, so we know it's the banking industry, at least in Canada, that is affected by this. Look at this. I was forced to put her in debt. I mean, you want to read this thing and you just want to, it makes you sick. A former CIBC call center worker in Halifax said her manager pressured her to sell a $250,000 line of credit to an 82-year-old woman who just called to arrange a small loan for her son. She said, "I trust you, dear," and I was forced to put her in debt. All right, now how does this work? Basically, she said this: if I didn't say the right words, looking down here, she made sure I put my client on hold and coached me, saying, quote, "Sell to them or you will lose your job." And even if this is sort of, exaggerated, they make you feel this way. Anyone in the financial industry, or most industries in fact, even if it's not said in those words, you know what they're talking about. You know what management says when they say, the bosses, they don't like when you do that. The bosses do this. And they try to just, take themselves out of the picture. Meanwhile, it's just the way it works. One boss tells another boss, and this and that. There's a corporate ladder, and they all are compartmentalized, and they all tell you that it's not them, it's the guy above them, and then, it gets the pressure off. But we know what's happening. Let's move on here. And TD Bank shares drop the most since 2009 after this happened. And for good reason, because people are worried, okay, if they're doing that, I want my money out of this bank. Then, of course, they find out that it's all the banks. Oops, right? You look at it, where do you put your money? These individuals, non-sophisticated investors, they don't know. They don't know what's happening. They think the banks are the best place to put your money. That's the safest place, according to them. And a lot of people are going to be hurt by the bank's practices. This is related to one individual company. Look, anyway, I want to go back just for a moment and just say some of the other things that they were doing. They would, for example, accounts, if you keep a minimum of, let's say, $5,000 in your account, you will not be charged a fee. But if you go under that, they then will charge you this monthly fee. So a lot of people, they keep their monthly minimums. So what people were doing a lot of times was saying, first of all, we'll increase your credit limit. And they say, well, no need or whatever. And they just do it anyway. Most people wouldn't necessarily complain about that. And if they do, then they do. But they'll just go ahead and just increase people's credit limits. Or they go and do all these nefarious practices. For example, this one lady, they said that they realized she always kept a big balance in her account. It was over that $5,000 amount. So they slipped her into a new account, which would be considered an upsell, hoping that she'll never go below that $5,000 limit. Then the first month she does, she calls in and says, excuse me, I'm being charged this fee. Why is that the case? And they said, well, you were, you put into a new account and that's it. And they said, the individual said, well, I didn't say that. I didn't give approval for that. And they, well, apparently you did. And that's sort of the thing that was happening. All of these tricky games that they were playing on people, and it's actually charging people this way. And look how many people would not be able to, they're too busy, or maybe they thought that they did it themselves and this and that, and they get screwed over for the money. They're taking money. And it's not even in sort of an inflationary measure. It's not a bail-in. I mean, they're just going and stealing from clients now on the lower level. That's how they do this. It's no different than what has happened through all the industries. Okay, so this individual company here is just one. I'm just showing you just one. During the financial crisis, they had subprime mortgages. That's sort of like the spark that threw everything off. Subprime mortgages are the worst of the worst, and they bundled them all together, and were actually rated by the rating agencies, rated AAA. Okay? Because they said it was so diversified. You're talking about car loans, you're talking about mortgages, you're talking about credit card debt, and it's not just from one place, okay? You had it from North Dakota, you had it from Florida, California, geographically just spread all out. You had the type of debt being spread all out. I mean, this is diversified as it gets. Unfortunately, that really was a big mistake, and everything came tumbling down because they realized this is all garbage. Oops. Okay, so now we are heading back into that yet again. And, this basically just shows they're saying it's better this time. It's not so dangerous. This and that. I'm not going to get into the article, but we're heading in that same direction yet again. It's becoming something that they're picking up on because why? Because they're always in demand for more profit. And if you put it into German bonds, you're not going to get that return you want. In fact, you may be getting a negative return. So they go in riskier assets, and this is the kind of thing that you get. Now, the reason I mention this is because why aren't they doing anything? Why aren't they protecting people? When you put money in the bank, you know it has to be protected. All of these practices, they need to be investigated and they need to get in big trouble. Unfortunately, that's not going to happen. Maybe a little slap on the wrist, but here is a perfect example of why. When you have the rating agencies labeling garbage as AAA, you know that the corruption runs right through this. All right, one more example of this. Do you remember during the financial crisis, Mr. Paulson, right? He became Treasury Secretary, and with shares of Goldman Sachs before becoming Treasury Secretary, if he ever wanted to sell them, he would have to pay $200 million. But by becoming Treasury Secretary, he was required by law to sell them. And so, what a blessing, as they say here, that he was able to do that, get a nice $200 million tax break, and give himself a nice bonus. And that's the way this works. The criminality in this system is very apparent. This happens to be the US, but obviously it's going on in Canada as well. And we know the LIBOR scandal has happened previously. It's all been, out in the open. All right, and then sort of interconnected with that is the housing market. People have contacted me over the years talking about the housing market in the places that they live. Look at the example of Canada. What an astronomical amount that this has come up. I believe this article mentions 23, yes, it's right there, 23% in the past year. 23% in housing. That's a bubble? No. Ask any Canadian, ask anyone from Toronto. Is the market in a bubble? 99% of people will say no. I mean, if you're not from Toronto, you're from wherever else. Typical city life, but in other countries, okay? And somebody tells you that. Is this a bubble? 23% year-over-year increase, and the prices in the greater Toronto area, so basically the area surrounding Toronto, $727,000. $727,000. Prices have increased 23% year-over-year, and they are saying it's not a bubble. Okay, the article is talking about these reports that say, yes, it is a bubble. However, the people, the individuals are saying, no, I need to get in. If I need to buy a house, I can't afford it. I'm just going to get in. I'm just going to take on way too much debt. I can't handle it. It's okay. That's what they're doing. And the banks are willing to give out the mortgages. There's no problem there. Absolutely no problem. And you may not know where these areas are, but Barrie, for example, okay, has become a very hot market. 30% year over year. So imagine this place, Barrie, which is, from the downtown core of Toronto, would take you, depending on the traffic, let's say an hour and a half to 2 hours north. You just drive just north. Think about that. Nearly 2 hours away, prices are rising 30% year over year. That's the kind of bubble they are experiencing. And why isn't anything being done to stifle this? Because they regulate which they want to, and they will not regulate that which they don't. When the banking industry is going crazy, creating all this subprime and all these derivatives, and they're creating quadrillions in derivatives, no, they're allowed to do that. But when it comes time to people being unable to afford homes, nothing's able to be done. Nothing sensible. But when it comes to, giving individuals lower taxation and everything else, oh, well, we can't do that. Sorry. Yeah, no, not possible. Anyway, you see where I'm going with this video. Your money is not safe in the banking industry. When I talk about this to individuals, there's always a bunch of people who come out and say, shut up and try to put this down. The reason I tell you this information is because I'm legitimately concerned. If you want to know my personal stance, I sold my last bit of paper, my stocks, on December 31st, 2007, in anticipation of a worsening economy. I happened to get that one right. I haven't bought any since. I could have made a lot of money had I bought since March 2000. If I had predicted March 2009 to purchase, sure, I could have made some money had I sold. But I feel very confident in what I've done, and I work towards my own plan, which is called the Money GPS strategy. You've heard it before. If not, check out the video that I have about my new book, The Global Economic Collapse. Anyway, that's it for this video. If you found it informative, please give me a thumbs up. And last but not least, if you found the video informative, then I know you will find my books, The Money GPS and Global Economic Collapse, even more informative. At Amazon, they have a look inside feature that will allow you to flip through the pages of the books and see if you like it. Take care.